Okay. Increasing which two of the following would be associated with the financial objective of shareholder wealth maximization? So remember one thing, the major objective of financial management is to maximize the wealth of shareholder. So if the objective is the maximization of the shareholder wealth, what is the meaning of this? Shareholder wealth means two things. Shareholder wealth has two meanings. Dividend plus capital gain. Dividend plus capital gain. So there is a very famous ratio for this that is called total shareholder return. Formula is closing market value minus opening market value plus dividend divided by opening market value. There is another formula which is very famous, part of this, dividend yield. Dividend divided by opening market value. And capital gain. Closing minus opening divided by opening. So you should remember that capital gain formula is closing market value minus opening market value divided by opening market value. Dividend yield is dividend divided by opening market value. And the combination of these two is total shareholder return. Closing minus opening plus dividend divided by opening market value. So whenever someone asks you, what is shareholder wealth? Dividend plus capital gain. So technically the answer of this question is that we should increase the share price. We should increase the dividend payment. So what about reported profit, EPS, weighted average cost of capital? No, direct objective is increasing dividend, increasing share price. So A and B are the answer. Simple. Okay, next question. The following information is available for a listed company. Dividend recently paid is this. Dividend cover. Dividend cover is dividend divided by remember the interest cover formula. Interest cover formula was PBIT divided by interest. It's a very famous formula. Although it's not relevant here, but just telling you. How much we have in profit to cover the interest. Similarly, dividend will be available from the final profit, profit after tax, divided by the dividend. How much we have the final profit, how many times the final profit is available to cover the dividend. So these ratios are very famous for coverage ratio. Dividend cover, profit after tax divided by dividend. Interest cover, PBIT over interest. Yes, if there is any preference dividend, you will deduct the preference dividend first of all, then this formula will be applicable. So this is more likely this formula. Dividend cover is profit available to ordinary shareholder divided by dividend. Just like EPS, the quick formula of EPS is profit after tax divided by shares. But the actual formula is which profit? The profit available to ordinary shareholders. And what do I mean by profit available to ordinary shareholders? Profit minus preference dividend. वो profit जो directly available हो ordinary shareholders. So we have to deduct the preference dividend if any. But obviously, this is not relevant here in this question. Okay, dividend cover is given, P ratio is given, estimated future growth is given. What is the cost of equity? We know the cost of equity formula is D naught into 1 plus G divided by market value plus G. Okay. So what is missing? Dividend is missing. Market value is missing, but growth is given. Okay. If the dividend is given and dividend cover is given, we can calculate the earnings. Dividend cover is 4. Dividend is 0.1. We can calculate the EPS. So how do you mean by it is EPS, not the profit after tax? Because dividend per share is given, so you will get profit per share. So this would be equal to 0.4. EPS would be 0.4. But we don't need EPS. We need the market value. Okay, dividend is also given 0.1. Okay, EPS is given and P ratio is given. So P ratio formula is price, market value over EPS. EPS is 0.4. P ratio is 5. So you can calculate the market value. Market value is 2. So let's calculate the cost of equity. What is the answer? What is the answer? Point 0.1 into 1.08 divided by 2 plus 8. 13.4. 13.4 is the answer. Which two of the following, the efficient market hypothesis refer to the way in which the prices of traded financial securities reflect relevant information? Which two of the following are true for a weak form efficient market? Share prices fully and fairly represent past information. We know that in weak efficient market, past information will be reflected. So A is the perfect answer. Share prices fully and fairly represent private information. No market will reflect. No market will reflect the private information. Share prices follow a random walk. Yes. C is also correct. Random walk means if there is a good information, share price will follow upward path. If there is a bad information, share price will decrease. So in weak form efficient market, remember, you can write it somewhere. Prices only reflect the past information. And on the arrival of new information, share prices show a random walk. What is the meaning of random walk? If there is a good news, share prices will go up. If there is a bad news, share prices will go down. It follows a random walk. So A and C are the answer. Next question. Next is Bilbo Company is an unlisted company with 800,000 issued shares. Seema is one of the founder and owns 20% of the issued shares. So out of total, you have the 20% shares. Bilbo Company has just paid its annual dividend of 0.3. It is expected that next year dividend will be 0.32. After that, it is expected that dividend will grow indefinitely at 2% per year. Shareholder expect a 12% return from their investment. So technically, this question is saying that in year 0, they have paid the dividend. In year 1, they are expecting 0.32 dividend. And from year 2 onwards, this dividend is going to increase by 2% for the foreseeable future. So multi-growth model आएगा यहाँ पर. We will apply multi-growth model. Discount rate is 12%. And we will apply 12% discount rate. -1. इसमें भी -1 आ जाएगा. 0.32 into 1.02 divided by 0.1. 3.2 is the answer per share. Multiply by 800,000. But we will only calculate the value of SEMA shareholding into 20%. So 512,000 should be the answer. 512,000 should be the answer. Okay. We will calculate market value per share, multiply with the number of shares. But in the question, we will only calculate the 20% of the answer. Okay. There is another way of solving question. I usually follow this technique, but there is another way of solving question. That is, in year 1, dividend is 0.32. And next year onward, this is going to increase by 2%. So you can apply directly formula here. 0.32 divided by cost of equity minus G. But in that case, do not multiply with 1 plus G. The answer would be same. It's up to you. You follow this or this technique. But I usually follow this technique. Next year dividend is, year 1 dividend is given. Next year it is growth. So I will usually make a next year and then solve in this way. But you can solve with this technique as well. Examiner usually follow this, but ultimately both answers are same. And I am using this technique in AFM, FM, CFA, and even in practical life, it always works. So that's why I'm used to it. Especially if you are solving on the Excel, this technique is more useful. Otherwise, you can use this technique as well. It's up to you. Okay. Which of the following is an implication of the semi-strong form of efficient market hypothesis? Security prices movement should be predictable. Semi-strong prices should be predictable. It's not possible. If share prices are predictable, everyone can earn the profit. Security prices should fully and fairly reflect all available information, whether public or private. No. Only public information. Security prices should move when a takeover is announced. When the takeover is announced, prices will move. In semi-strong market, on the announcement, market will move. There would be no need to ban insider dealing. Only C is the answer. Remember, weak market only reflect the past information and shows random walk. Semi-strong shows public information, past and current. Who can work here? Technicals. And who can work here? Fundamental analyst. Okay, strong form. It will reflect public and private information past and current, and future, no. No one can predict the future. Future कोई नहीं predict कर सकता. Okay. So try to remember this. Week will show past information, and prices are show the random walk. Only fundamental analysts can work here. Semi-strong shows public information, past and current. Okay, ये खत्म कर रहा हूं मैं. This is not possible. This is not possible. Okay. Only who can work here? Insiders. But not allowed. इसलिए मैंने क्रॉस कर दिया. It is they are not allowed. Okay. Strong form shows public and private information, past, current. So what about future? No. No one knows the future. Okay, who can work here? No one can beat this market. No one can earn extra profit in this market. So what to do? Manager should select positive NPV projects. Okay. What to do here? Manager should select positive NPV projects and announce. Announcement zaruri hai. Announcement is required in semi-strong. But in strong form, you should only do the good projects. There is no need of announcement. Like in today's world, if you are doing any good deed, you have to put on the Instagram because the market is semi-strong. But if you believe that Allah is watching, so you can only do the good deed. There is no need to put on the Instagram. So strong form is everybody knows everything. So do the good projects and invest in that company. But in semi-strong, if you are doing a good project, you have to announce it. Okay, technical analysts cannot work in any of these markets. So where technical analysts can work? A market which is lower than the weaker form even. जो weak से भी गई गुजरी होगी. ठीक है? So it will cover majority of your MCQs. Please take the screenshot of this. G. Where technical can work? Not efficient at all. Okay. Next one. Next question. Elfreda. Elfreda company is an unlisted company with 200 million shares in issue. It has earning attributable to ordinary shares 90 million, of which 30 million was distributed to shareholders as an ordinary dividend. Otis company is a listed company with 50 million shares in issue. Its earning per share ratio is 0.25 and the market capitalization is 2750. What is the value of the ordinary shares in Elfreda company using Otis company PE ratio? So first of all, we need to calculate the Otis company PE ratio. So let's calculate the Otis company PE ratio. Start it, please. Okay. First of all, Otis PE ratio. It's market capitalization. Market capitalization means total market value. 275. Okay. EPS is given. That is 0.25. Okay. P ratio formula is market value divided by EPS. So EPS is 0.25. Market value in total is given. So what is market value per share? 2750 divided by 555. So P ratio is 20. So P ratio is 20. So what is the value of Alfreda company using P ratio? So P ratio is 20. So what is the earnings of the Alfreda? 90 million divided by 200. 0.45. 9. 9 is the P ratio. Sorry, 9 is the market value of Alfreda. But remember one thing, although 9 is the answer, but you should know that this answer has been calculated based on the P ratio of listed company. Your company is unlisted. Your company is unlisted. Maybe in question it is given that you should also apply a discount to this market value. For example, 20%, 30%. If question is silent, this is the answer. If it is written that apply 20% discount, so market value will be 20% less. Apply 30% discount, market value will be 30% less. No. Question is, what is the value of an ordinary shares? We only need to calculate market value per share, not the total market value. ये ध्यान से पढ़ना है क्वेश्चन. Okay. Next. Fuchsia company is a listed company with a cost equity of 10%, which plans to achieve dividend growth 5% per year for the foreseeable future. Company operates in an industry with an average PE ratio of 11. The ordinary shares of the company have a nominal value of 0.5. Profit before tax, finance cost, profit after tax, ordinary shares. Okay. Equity, long-term liabilities, current liabilities given. Long-term borrowing consists of a loan notes paying 8% per year interest, which are redeemable in 5 years' time at a premium of 4% to their nominal value. Before tax KD is 7%. What is the value of Fuchsia company using P ratio method? Let's calculate. If you recall, what is the P ratio formula? You should know the profit because answer is given in millions. So take the total profit into P ratio. So what is the total profit of our company? 198. Now search where P ratio is given. No. Fuchsia company operates in an industry with an average P ratio of 11. So average P ratio is 11 in our industry. So multiply these two. 198 into 11, 2178. So value of the fuchsia using P ratio method is 2178. What is the value of the fuchsia using the dividend valuation model? So dividend is given 110. What is the growth? Company wants to achieve 10% growth. And cost equity is given. It's a very simple question. You are solving these questions. Then you will solve Kaplan question. There is a huge difference between Kaplan and these questions. These questions are examiner is testing your concepts. Kaplan is testing your patience. So if you are unable to solve the Kaplan question, don't take it to your heart. Okay? Pareshan nahi hona. 2310 is the answer. What is the market value of loan notes? 8% interest, 8% interest, which is redeemable in 5 years' time. So 8% interest. Remember, never apply tax in market value. So it is redeemable at 104. Before tax KD is 7%. So what is the annuity factor at 7%? 1.07 for 5 years. 4.1. 32.8. 74.15. Sorry. So market value is 32.8 plus 74.15. 106.95. So he's asking in total. What is the book value? 300. $320.9. C is the answer. 320.9. Which of the following statement relating to capital market efficiencies are correct? Which of the following statements relating to capital market efficiencies are correct? Share price takes several days to respond to new information if a capital market is weak form. Look, this statement is apparently it is looking like correct, but it is not. Share prices will take time to respond to new information. But 1 hour, 2 hour, 1 day, 2 day, it depends. So we didn't discuss about the timing. Okay, it will update it next day, it will update it after 2 days. No. There was no discussion of timing in our lectures. So A first is incorrect. In a weak form capital market, technical analysis cannot produce abnormal gain. We have discussed like few minutes earlier. So second is correct. Reality में जरूरी नहीं एक दिन लगे. Because markets are inefficient. Maybe it will correct in 10 minutes, 1 hour, 2 hours. Maybe it may not correct like in a month's time. It depends. Nobody knows. Share prices may take time. Share prices may take time to respond to new information, then this is a correct statement. Okay. Which of the following statements about in semi-strong market, the new information will be immediately become part of the prices. Immediately. In strong form market, it is already part of the prices. Which of the following statement about noise trader are correct? Noise traders are those traders which are trading on the basis of past information and which are kind of those traders who are not basing their decision on fundamental basis. इधर से सुन लिया उधर से सुन लिया ट्रेडिंग करना शुरू कर दी. Noise traders are those traders who are not basing their decision on fundamental information, on correct information. They usually follow others. So second is incorrect, first is correct. They generally overreact to good news and bad news. Overreact. If there's a good news, they will start buying everything. If there's a bad news, they're selling everything. Noise traders are most like us. Practically, like human. If you see good news, we start overreacting. Like वो अर्शद नदीम ने मेडल जीता, पूरी कौम ने उसको करोड़ों रुपए देना शुरू कर दिए. गुड न्यूज. पाकिस्तान ने वर्ल्ड कप में बुरा परफॉर्म किया, पूरी कौम ने कहा कि इनको फारिग कर दे, गोली मार दो. So we as a nation are noise trader. We generally overreact to good news and bad news. Impatient behavior, yes. ये ट्रेडर करते हैं. So A is the answer. Next one. Light company. Ordinary shares are given, 9% preference share is given, 6% loan notes, 8% loan notes. Ordinary shares of light company have a nominal value of 0.25 per share. And a current ex-dividend market price 6.75 per share. Ordinary share prices are expected to grow by 5% per year for the foreseeable future. 9% preference share of light company are irredeemable and have a nominal value of $1 per share. Cost of capital of the preference share is 9.5%. Okay, 6% loan notes are redeemable. Okay, 8% loan notes are convertible. Let's solve the question. What is the total market value of 6% loan notes? Now let's read it. 6% loan notes are irredeemable. Normal value of 100. Before tax cost of debt is 7%. So 6 is the interest rate into 100, multiply with 100. Divide by 0.07. 6 divided by 0.07. Market value is 85.714. But that is for one bond. Total bond is 22 million. $18.86 to one decimal place. 18.9. 18.86 is 18.9. This is important. My answer was exactly 18.857. So this will become 18.86. 18.86 means 18.9. If we round it off to one decimal. ये भी देख लेना exam में. You have to do it carefully. Okay. What is the market value of each 8% loan notes? Each means one. So 8% loan notes, this is. So loan notes is convertible after 7 years or redeemable after 8 years. So let's calculate the conversion value. 15 number of shares into 15 is the number of shares into what is the market value per share? 6.75. And share prices will grow by 5% per year for 7 years. So it will be 1.05 raised to power 7 into 6.75 into 15. 142.47. 142.47. Okay. But this is at the end of 7th year. Okay. If you do the conversion, you will convert after 8 year. So in 8th year, conversion will be, you will get 100 plus you will get 8. So I think there is no need of doing discounting of this, because answer would be, the conversion value would be higher. So common sense, no? Conversion value would be higher. Why, sir? Conversion value is already at 142 in year 7. And in redemption, you will get 100 plus 8. So if you take the present value of this for 1 year, obviously it would be lower. It is still lower. So now let's solve it. 1277 cash flows. Every year you will get 8. 142.47. Discount factor is 9%. 1.09 raised to power 7. 70. 5.66 into 8. 142.47. 123.23. Okay, this is not the answer. What's wrong here? Discount factor is 9%. I think I have done mistake in calculating the NVT. $5.03. Mm-hmm. 118.9. B, beta is the answer. Beta is the answer. Okay. Question number 3. In relation to valuing preference share, which of the following statement is correct? The market value of an irredeemable preference share is calculated by multiplying the dividend by 1 minus the tax rate. No. There is no tax in the preference share. There would be, you will not deduct the tax in the preference share. Preference share is a tax efficient way of raising finance. No. Preference share can be difficult to value when they pay a variable rate of dividend. Redeemable preference share are classed as equity in the statement of C is the correct answer. C is the correct answer. बाकी सारे wrong. Okay. In relation to practical consideration in valuing shares and business, which of the following statement is correct? Practical consideration. Share price of a company can rise even when it has cut its dividend. ठीक है. Marketability of ordinary shares can be improved with a share buyback scheme. Share buyback will increase the market value. So if the market values are, D is classified as debt. Yes, this is debt. That's why it's wrong. Marketability of preference share can be improved with a share buyback scheme. Share buyback से क्या होता है? There will be lower number of shares available in the market. Market value will rise. And when the market value is rising, that means share price will become less marketable. महंगी चीज आसानी से नहीं बिक सकती. This is wrong. Marketability will decrease. What is marketability? How easily you can sell. When a share is expensive, you can't sell it easily. Investor will always act rationally and respond to a good news. Investor is not rational generally. Practically, investor is not rational. Okay. Random walk theory suggests that share price movement can be forecast. Share price, you can't forecast the share price movement, guys. Random walk theory is the result of if there is a good news or bad news, share prices follow random walk. Forecast nahi. A is the answer. Share price of a company can rise even when it has cut its dividend. होना क्या चाहिए? When dividends are cut, share price should fall. But share price can improve because company can say at the same time, we are cutting the dividend, but we are launching AI product. Share price बढ़ना शुरू हो जाएगी. आजकल AI का जमाना है ना. Example दे रहा हूं आपको. Considering behavioral finance, which of the following statement is correct? MM को छोड़ो. उसने practical पूछा हुआ है. He's asking practical consideration, not the MM. Read the question carefully. You cannot apply MM. Random walk theory suggests that share prices movement can be forecast in a weak form efficient market. This is not random walk. What is random walk? Random walk is in weak form, there is only a reflection of past information. सिर्फ past information आती है weak form. Agreed? Right? If there is a good announcement, good news announcement, share prices will increase. If there is a bad announcement, share price will decrease. That is called random walk. So random walk is not forecasting. Random walk is the response of the announcement of the news. What is? Let me explain from the MM perspective. MM क्या कहते हैं? MM Modigliani Miller theory suggests that dividend is nothing. we should see the total package. How much company is earning. If company is cutting the dividend, but overall company is earning well, so there will be no impact. If company is increasing the dividend, and on the other side, company is not investing, so your wealth will remain same. Okay? Your wealth will remain same. So MM ke according, if you're increasing dividend, decreasing dividend, it will not affect on the market value. Your wealth will remain same. Because if you are increasing dividend, you are less investing in market. And if you're decreasing dividend, you are more investing, more reinvesting. So overall, see. But yahan examiner has asked from the practical perspective. Lastly, considering behavioral finance, which of the following statement is correct? Behavioral finance support the view that stock market bubble result from rational investment decision. Stock market bubble, bubble कहते हैं stock market बहुत ज़्यादा बढ़ जाए. Stock market bubble means if the stock market is abnormally high. So when there is a bubble, when every normal person in your country is taking part in the stock market, समझो bubble out. If you are going to a shop, restaurant, and everyone is talking about stock market, समझो it's the time to take exit from the market. Market is in bubble. When every irrational person is also investing in the stock market, noise investor or noise traders are investing in the stock market, समझो market is in bubble. So this is not the answer. Bubble will only come from the irrational investors. Noise trader makes investment decision by using software to analyze real-time share price data. Noise trader make investment decision by using software to analyze. They base decision on the past information. They base their decision on the past information. Okay. Share price anomalies do not undermine the perfect capital market theory. Anomaly is which is क्या कहते हैं जी, जो परफेक्ट के अगेंस्ट हो, जो रियलिटी से डिफरेंट हो. So anomaly will undermine the capital market theory. Anomaly is undermining the capital market theory. But for example, normal is सूरज मशरक से निकलता. Anomaly is which is against the normal. Anomaly is something which is different from the normal. So share price anomalies undermine कहते हैं कम करना. Share price anomalies undermine the perfect capital market theory. What is the what is share price anomaly? Example of share price anomaly. People believe that on Friday, stock market usually goes up. Why, sir? Because there is a weekend effect. In Pakistan, there is an anomaly that in Ramadan, in the last 10 days of Ramadan, share prices normally goes up. Why? There's a ED effect. Because there would be a Eid holiday after the Ramadan. So everyone will go home happily. So prices will go up. Now your reaction should be, sir, seriously? This is happening? Sir, what is this? अब आप पूछोगे, sir, what is this? I will say anomaly. Anomaly is which is against the theory. Acha, your next question would be, sir, is this really happen? Yes, it happened sometime. So that's why I'm saying share price anomaly will undermine the perfect capital market theory. Perfect capital market theory कहती है ऐसा कुछ नहीं होता. But there is some anomaly. Anomaly is different from the market. So share price anomaly undermine the perfect capital market theory. This is incorrect. D is the correct answer. अब मैंने पढ़ा नहीं है because if all the three are wrong, D is the correct answer. Momentum effect suggests that investors can buy shares in a belief that a recent rise in share price will continue. What is momentum? Momentum means if you buy the shares today, you're expecting that it will go up by tomorrow, day after tomorrow, and the day after tomorrow. Momentum means if there is a upward momentum, prices will continue to rise more. If there's a downward momentum, prices will continue to decrease more. So, momentum. So, delta is the correct answer. Abrar company has 6% convertible loan notes in issue with a floor value of 106.20 per $100 loan note. Each loan note can be converted into 15 shares at any time or redeemed in 5 years' time at nominal value. What is the minimum share price at which investor would convert their loan notes? So we need to calculate the minimum price at which the investor will convert their loan notes. So floor value is 106.20. What is the meaning of floor value? If investors unable to convert their bond into ordinary shares, this is the minimum value which they will receive. This is the value. You see. Or this is the value of bond. This is the value of the bond. Okay. And each loan note is converted into 15 shares. What is the minimum share price at which the investor would convert their loan notes? So divide the floor value with number of shares. $106.20 divided by 15. 7.08. So this is the minimum share price. What is the minimum share price at which investor would convert their loan notes? Okay, 7.08 is the answer. Floor value, what is the minimum value? Even if there is a discount or premium. Floor value in comparison with the conversion value is the minimum value. इसका वो प्रीमियम और डिस्काउंट से कोई ताल्लुक नहीं. अच्छा जी, अब मेरा क्वेश्चन. Listen the question carefully. 7.08 is the minimum share price at which investor would convert their loan notes. If the market value per share at time of conversion is 7.5, if the market value per share at time of conversion is 7.5, the convertible bond value is equal to 106.20. Higher than this or lower than this? Please tell. Higher than this or lower than this? Let me correct. Lower तो हो ही नहीं सकता. No value can be lower than the floor value because floor value is the minimum value. So if the conversion value, देखो, what is 7.08? 7.08, that share price at which investor would convert their loan notes. It is that share price at which shareholder will think that bond is convertible. I'm saying that if this market value is 7.5, the convertible bond will become attractive. Its market value will rise because one share will give you 7.5 and 15 shares will give you values 15 into 7.5. It will give you more value. आपको ज्यादा फायदा देगा. 7.08 तो वो वैल्यू है जिसके ऊपर तुम अपने बॉन्ड को कन्वर्ट करा सकते हो. 7.5 पे तो तुम खुशी खुशी कन्वर्ट कराओगे. डिड यू गेट इट? बात समझ आई है? अच्छा, और if the market value is lower than this 7.08, like 7 or 6.5, you will not convert. Simply you will not convert. Sir, what will happen if market value move to 6.5? सब कुछ खत्म हो जाएगा. No, you will still get the floor value. You will still get the floor value. Redeem at nominal value. Yes, yes, yes. A company has announced that it will pay an annual dividend equal to 55% of the earning. Earning share is 0.8 and it has 10 million shares. Return on equity is 20%. Current come dividend share price is 4.6. So 0.8 का 55% लें. 0.44 is the dividend. Cumulative dividend market value 4.16. Okay, return on equity is given. Let's calculate the growth. So if company is paying 55%, company is retaining 45%, 9%. So what is the cost of equity? Let's calculate the cost of equity. 20.5, 20.5 is the answer. Okay, next question is given. Dasvin, revenue, profit, corporate tax, preference share. Preference share capital consists of irredeemable 6%. Cost is given, ordinary shares, nominal value, P ratio. Future share price growth is given. Okay. What is the market value of the preference share? Okay. 6% dividend into 0.5. 0.03. Divide by 0.08. Into what is the value of the preference share? 10. 3.75. 3.75 is the answer. Using the P ratio method, what is the value of the Dasvin company? Okay. Dasvin has a P ratio of 12. Dasvin has a P ratio of 12. What is the profit for the year? Remember, Preference shares are there. So profit available to ordinary shareholder calculate करनी. Four minus 6% on 10. 0.6. 3.4. So 3.4 into 12, 40.8. These rounds. Based on the current ordinary share price of $2, what is the market value of the convertible debt? $2 is the current share price. Okay, the 7.5% convertible loan note with a nominal value of 100. Loan notes can be converted at the end of 6 years or redeem at 100. So conversion value is 40 shares into 2 into every year share price will grow by 6%. $113.48. And if you do the conversion, it will give you 100 only. So let's solve. कितना मिलेगा जी 7.5. Discount rate is 6%. $116.88. And what is the book value? Long-term borrowing. 21.04. Approximately 21.04. Okay, this is nearest answer. In relation to the information requirement for valuing shares, which are the following statement is correct. Only information on the market value of tangible assets should be used in valuing shares. Only information on the market value of tangible assets should be used in the valuing. Okay. Shares are likely to be mispriced where managers and investors have different level of information. Information asymmetry हो तो misprice तो होती है. Mispricing is information asymmetry means I have the other information, but you have different information. Okay. So beta is correct. Detail of key personnel are not relevant to market capitalization of a listed company. You know, especially in service-based companies, key personnel or key employees are very important. If they leave the company, market value will go down. Since companies do not release information that undermine their competitive advantage, most of the published information about a company is not relevant to placing a value on its shares. नहीं, जरूरी नहीं है. Companies have to release the information because listed companies are audited. Or even if companies tries to manipulate the figures, still the public data is not that bad because there is a lots of requirement. So D is, that's why not the correct answer. Beta is the correct answer. Whenever there is an information asymmetry, share prices will misprice. In relation to the behavioral finance, which of the following statements are correct? When investors believe that recent share price increase will continue, this can lead to irrational investment decisions by uninformed investors. By the way, what is this? if you believe that share prices will continue to rise, what was the name of this effect? What was the name of this effect? Momentum. Momentum. And who believe that this momentum will continue to rise? This is irrational investment decision by uninformed investors. Because everyone is buying, share prices are going up, we will also buy, and we will hope that this will go up. Informed investors can contribute to speculative stock market bubble. Informed investors can continue. अब stock market bubble है. Share prices are going up. Like if you remember, there was a real estate bubble even in Pakistan. Stock real estate prices are going up, stock prices are going up. Will you buy at that time? और आपको पता है कि ये किस दिन खत्म होना है. Will you buy? सही वाला बताओ दिल से. दिल से तो बाय करेंगे. सो इन्फॉर्म्ड इन्वेस्टर विल आल्सो बाय. सब यही करते हैं. एवरीवन विल बाय एट दैट टाइम. यही तो मसला है. Even in our life, we are aware that what is going to happen, but still we will become part of that. Okay? Both are correct. Decision is irrational. So we can say that even the informed investors can also do the irrational decision. देखिए ज्यादा बड़ा मसला क्या है. When you are uninformed and you do the mistake, we can say that okay, ये मासूम है. Irrational decision तो होता ही तब है जब आप informed हो. Otherwise, that would be a mistake. Irrational decision is when you were thinking right, but somehow you take the decision emotionally. Like let me tell you, एक आपकी लड़ाई हो गई. You are in a fighting mode. आपने गन पकड़ी. You pick the gun and shoot the other person. आपको नहीं पता किसी को शूट करने से क्या होता. You know, you are informed that you will go to jail, but you have taken irrational decision because of your emotions. Mistake क्या है? Somehow गलती से गन चल गई, आपकी गाड़ी में पड़ी थी, वो अचानक से खुद ही चल गई. That is a mistake. No? So informed investors often do this mistake. They become the part of the circle. Okay, both are correct.